Hello everyone and welcome to today's cryptocurrencies update for Friday, November 18. So we time-stamped that one. Another week almost in the books, and let's just simply review kind of what we already know. It never hurts to do that on a video update because, as you know, when the evidence changes, we change accordingly. That is the best way to assess. That still doesn't mean we get it right all the time. That is impossible. We do need to stick to our trading rules, even though the forecasting is trying to be as accurate and reliable as possible. We still have to listen to our trading rules. And there are a couple of ones. The first one and the most important one, besides the 21 listed here, and I can't say it often enough, rule number one is minimize your losses. That's it. Number two, in the far distant, is maximize your profits. Number three is always have a stop in place. Always. About once a month, I'll have a call with somebody, either externally or one of my members, who are underwater by quite a lot. 10 out of 10 times, it's because they never used a stop or stop loss. And that just goes to show tens of thousands, hundreds of thousands of dollars underwater, and that position needs to be salvaged. Of course, again, it's not my work, it's the stop loss that matters. I can say it's going to go to 100,000, but if it doesn't and it goes to 1,000, don't stick to your guns. Let the stop loss work. You can have an alert that will tell you the stop loss level. You get it on your phone or your email. There are many ways to get stop losses. You can automate them. A good exchange should have automated stop losses. If not, make sure you have a price alert so you get alerted, be it in the middle of the night. You gotta protect your hard-earned money. If that means pressing the sell button at 3 a.m. at night, so be it. Do it, please do so. It's your hard-earned money. If not, you are quite careless about your own money, and I think you deserve to lose it. Be sure you take good care of your money. If you take good care of your money will take good care of you. All right, so that brings me then to these other services that I provide. You can get on the phone with me. We can talk about all those things. I can build you a trading system as well. You can sign up for the Twitter alert of the trading alerts. There's many ways to use it to your advantage. This is not to take money out of your pocket, but I want to help you. Okay, it's difficult enough as it is, especially the prolonged bear market we currently are in. A very easy way is to join our hedge fund. We're not getting incredible returns, which is impossible in a bear market, but our returns are quite modest, but we're very much beating the cryptocurrencies right now. When we had the debacle with FTX and Alameda, we were actually up 1% for that week. Well, everybody else is down 20%, we're up 1%. You do the math. I wanted to convey that, of course, loud and clear. Here's the big picture. Count. I will update it with the latest in that we are now in cycle 4. I haven't updated it, so not alt cycle 3, but that's going to be cycle 4, and eventually we'll get cycle 5. And that then brings me to the charts. I really want to go through these household items because they're so important. They're there to help you. Here is Cardano. I'm still looking lower on this one. I see no reason to turn bullish unless we get back above about 45 cents. That fits with the bigger picture that we're now in this ending diagonal for this larger C wave, which can reach from 0 to about 15 cents. All right, it fits quite well. So I still think we're going to subdivide lower, that we had the fourth wave here before the whole crypto exchange collapsed, and now the final fifth wave. A few words about this collapse. The whole exchange collapse reminds me of the dot-com bubble bursting. When that happened, we were pretty much in the midst or the starting gates of a cycle fourth wave, similar to where we are now, I believe, for the cryptocurrencies, either a cycle 2 or cycle 4 for Bitcoin, Ethereum, but a large cycle degree fourth wave. The dot-com bubble burst because of insane speculation in totally unprofitable fictionary unicorn companies that had nothing to show for it, just IDs. And the same here with these exchanges and everything else being destroyed and destructed, billions of dollars being lost. The same happened in the dot-com burst. It's a fantastic reset. The strong will survive. Once the strong survive, the Bitcoins, the Ethereums, and maybe several other exchanges. Those are the ones to bet on. Everything else is a speculative altcoin. We really need to get rid of all this fluff that we've accumulated over time. And I think the FTX debacle is a symptom of that rot that has been going on, and we need to get rid of it. Okay, so anyway, that's the analogy we have: the 2000, 2003 .com bubble bursting, and now we have all these exchange bursting in cryptocurrencies. But there's always light at the end of the tunnel, so I still expect things to rally substantially once lows are in place. Avalanche looks also better for this extended ending diagonal fifth wave. Diagonals are tricky. It's all ABCs, but I like this path down to about $9, $10. That's strong support. Kind of fits the whole narrative here with this 3, 4, and 5 on the shorter time frame. This is the daily chart, right? Starting here in January, year to date, and you can really see this looks like a nice diagonal. So we should be in wave C of 3, then we get 4 and 5 before we can complete larger wave A for Avalanche. I prefer a bounce back up to about $60. If we get a $95 would be fantastic, but beggars can't be choosers. We can even stall at $35 if we want to. Okay, so there's no signs even in place that we've reversed, so we have to be patient. Bitcoin, shorter term time frame, still looks good for this 345 in green and that 345 in red, to about 10,000 plus or minus 1,000 for wave A. That is now my preferred path. Prove me wrong, market. And how can it prove me wrong? Then we have to go back above the early November high with a first sign above about 18,500. Okay, so let me put that one on the map here. This is of course the first, this level here, it's about 18,185-ish, somewhere around there. And then of course a break back above this, because then we can't have any more 1-2s, 1-2s, or 3-4s, 3-4s. 21,475, somewhere around there, right? So we need to get back at the minimum above the 18,185 level. If we do, all right, I'll start changing my tune. As the evidence changes, I change accordingly. But for now, this looks good. 3, 4, 5. Fourth waves are, of course, very messy and tricky, so we'll just let the current slop take care of itself. Once again, here's the bigger picture, 3, 4, 5 for wave A. Let's assume it bottoms at around 10,000. Wave B back up, 38 to 62% retrace, gets us back to 33 to 47,000. Again, that is still a 300 to 400% gain. You bet you a lot of people will get back on board the cryptos, and then all hell will break loose. And we should see, ideally, somewhere around 6,000 plus or minus 1,000. That'd be really nice, ideal downside target. As you can see, that is good, strong support. Moving on to Ethereum. Ethereum's bullish wave count is shown here on the daily chart, in that we're still in this complex WXY pattern for red wave 2B. It cannot go below 1,000. If it goes below 1,000, then I am inclined to think that we have a similar path ahead for Ethereum as we have for Bitcoin, and that we get this final fifth wave lower to about 650. That'd be really strong support, as you can see, 650. And of course, the cutoff is this black little line here, which is the June low. This is about 880. Okay, so technically we've done A, B, C lower. Now the question is 4 and 5. So was this not a leading diagonal, but was it similar to Bitcoin, a fourth wave, and now in the fifth wave? The whole price section is not very clear. It's overlapping, so this could also turn into a diagonal. It is just sloppy, but for now the trend is lower because the declining 250-day moving average are above price. So we really like to see this last fifth wave in orange to complete the Y wave at around 1,000 to complete the retrace of the entire diagonal, which is quite classic. If we go below 1,000, then we can go below what was the level here? About 880, then we can target 650. And above 650, I expect it to go back to about 2,200 to 3,200. So again, very large rallies that should not be sniffed at, but the rallies are going to be corrective. This larger B wave will be an ABC, just as I showed you here, an ABC. Here I've shown it as a simple zigzag, but the ABC can also become a flat or a triangle, to be determined. Can't not look that far ahead. So we have our price levels to watch. Ethereum, 1,000. We need to hold 1,000. If not, then we're going to get 850 and most likely 650. That will give us 5 waves lower. And after 5 waves lower, we need to see 3 waves back up before the next plunge happens. The next plunge would then take us to around 350 plus or minus 150. That wouldn't surprise me. It can go all the way back to 105. Please keep that in mind. That would retrace this entire primary 5 wave that we had since the 2018 low. But that is really still far, far ahead. And again, if you're underwater long term, you didn't listen to when I said that things were looking bad in March of this year, that we would go much lower, and that we actually went a lot lower than I originally anticipated. So those things you need to keep in mind, that if you're not willing to take a 10% loss, then you should be willing to sit on 80-90% losses. Okay, that is not fun. So minimize your risk. If we get in this big fat bounce, minimize your risk. Then sell it for a 10% loss. Is the new bull going to happen? Well, so be it. Then jump onto the next train and make it back. Okay. For now, again, your rule number 1 is minimize your loss. Once we get the bigger bounce and you are severely underwater, why not sell it for a lesser loss? Instead of 60-70% down, sell it for 10% down. So be it. Take the loss, be a man, and get over it and move on. And if we then still continue to 50,000 on Ethereum, don't whine about it. You were wrong in the first place. You adhere to rule number 1, minimize your loss, and then you move on and finally make a profitable trade. That's how you move on. Get rid of the losers and jump back into the winners. Okay, that is the real truth about trading. There's nothing else to it. It's really very hard, and we're not here to hold your hands and cry together. The market couldn't care if you lose all your money. That's the unfortunate business. There's no participation at all. It's really hard, but that's the way it is. I can't repeat it often enough. Anyway, moving on, Polygon. We either have the 1-2 setup, it's still possible, or the larger ABC. It starts to look more ABC-y, so to say, and then we still have a primary 4th wave bottom left in the future with the last C wave lower. The short-term price section, as I showed you, is very overlapping. And as I showed you in yesterday's update, we need to see a breakout clearly above this potential B wave high at about $1.30. And then primary 5 should be underway. If we break below the lows that we've made here at about 70 cents, then I am in the camp that we are in a last 5th or C wave lower, 1, 2, 3, 4, 5, back to about anywhere between 20 plus or minus 5 cents. Solana moving along quite nicely for this impulse. I don't think the recent bounce was all of 4. It's a little short considering how long wave 2 was. That one took 2-3 months. So this is probably still part of wave 3, but tracking the impulse path lower long term, all right, to this next support level, which are the 2020 lows. If we do that on a log time frame, so as you can see, of course, the high prices make the low prices disappear, but on a log time frame, you can see what we're then talking about for this entire decline to bottom somewhere in this range. Okay, so this is then the support level we're looking for Solana, which is at around let's see here, horizontal line, it's about $1.50 to $2. Okay, that's the next lower level to look for. It's unfortunate, it's just the way it is. We need to, of course, see strong reversals, right? We need to see strong reversals. This is the cutoff, $30. We get back above $30. I think we're in much better shape and have to start looking for a massive bounce to, again, about $100, $150. That would be the next target. But for now, I don't see it. The pressure remains to the downside. So that is all I have for today. I wish I had better news, so that yes, the new counter trend bull run rally has started. I don't see it yet. I still expect it. That's something else. So remember the time frame. We can be shorter term bearish, intermediate term bullish, longer term bearish, and then very long term bullish. So those are all different hats we need to wear. Trade it accordingly. And as always, please minimize your losses. These are bear markets. They're designed to destroy wealth. And I think it's doing very well with the whole recent FTX debacle. It's very, very sad that those things have happened and are happening. But I think we need to indeed get rid of all the fluff. And once we've got rid of all the fluff, the new bull can start. So for now, this is also a very prolonged bear market. So in time, let's see here how long we've now been in a decline. This is the width of the block. And as you can see, we're getting very close to the 2018-2019 decline. We've already surpassed the 2014-15 decline. So it really starts to suggest that we are indeed in a much larger degree bear market of the cycle, fourth degree, and a zigzag ABC would fit very well, get us all the way back to eventually 3, 4, 5, 6,000. And that would be a monster rally if it goes back to 150,000 plus. That would be a monster rally, but so far we're not there yet. Okay, so we're still trying to figure out when are we going to see this bottom. See nothing impulsive yet. Bitcoin at least above 18,185. Break above 21,475. I'm on board with the much larger bounce to 30,000 plus underway. Same for all the other ones. I don't see any change yet. We need to get above the breakout levels, and those are not happening. The only one that still looks reasonably bullish then is Ethereum with the $1,000 level hanging around its neck. If we lose that one, then that rope will be tightened, and I think we can start to look for triple digits at around 650 plus or minus 50, from where we should see then a massive counter trend rally. That remains the expectation. All right, thank you so much for listening. If you have any questions, you know how to find me. Take care, trade safe, and I'll see you all next Wednesday with, of course, the regular written updates on Monday and Tuesday. Take care, trade safe, have a great weekend. Bye.